Okay, on to commodities. So copper absolutely loves it when the market goes up. It absolutely loves it when the dollar goes down. We had both of those types of movements ongoing for the whole week, and copper closed strong. That makes sense. But still, it's what I've been saying for weeks now. Copper is just underperforming overall. It should have done more. It should be way higher given where the markets are, given how weak the dollar's been. It shouldn't just be breaking out of its, most recent resistance level. It should be in the 2.8s, maybe even 2.9s by now. So yes, it's strong technically. It looks bullish, nice close, and Monday it should be moving higher. I still think, first of all, I think the markets will go down. I do think the dollar can go lower, so that will help copper. But between the dollar and the markets, I think copper tends to follow the markets more. So maybe it's too little, too late. That's the best way to summarize copper, not just for this week, but for last week and maybe even the week before that. So it could just, go a little higher, rally a little more on Monday, but I just feel like it's not going to be able to rally too much more because I really think the market's going to go down. So copper, yes, short term a little bullish, but because of what I expect to happen in the markets, I think it could just roll over quite quickly. So that's my take on copper. Natural gas. It's just a serial disappointment, this one. Okay, we broke out of three. That was a nice initial pump. Then we retraced a bit too much, but still, it's normal. Then we kept on going, but look how little it rallied above the last high on this second pump here. And we over retraced, which is also normal for natural gas. It just screws with a lot of technical traders with their stop losses. So the fact that it bounced here didn't surprise me, but the fact that it's failed so quickly, that has surprised me, despite, I should be used to natural gas constantly disappointing. But what didn't disappoint me, even though I couldn't see this coming, is the fact that we found support around three. I mean, look at that. It tagged three, closed above. That's okay. I'm going to readjust this and make it $3 just because of this high. I think it's clear now that $3 is the big the big trend line. Now we have to see what natural gas does next. So if we go a little low, we do have this ascending. I think it will hold. I also think it will probably rally and close around or even higher than three if we do dip below. But what we want now is a curl around here, holding the ascending. I mean, what you'd really want is just an instant pump and then up we go. But just a bit more realistically, a bit of a curl, go back up. And then, to be honest, it's probably worth putting this descending line. Make sure we break out of that whenever that comes. And then just pump and just go. Finally, it's screwed with a lot of people, including myself. I mean, I'm in it for the long run. I'm in it for this gap fill at least, if not more of a move, like 5.4. But this is disappointing to say the least. So let's see. At least we closed above three, but maybe this is just a washout. What it needs just to get rid of all the speculators here, the short-term speculators that were looking for a big pump, like buying the breakout. Those people who are underwater, they sold, they have their stop losses. So maybe that's what it is. Hopefully that's what it is. But thing just needs to reverse and start squeezing to four, So let's see what happens there. Oil, another surprise for me. Now, I thought this drop down here. I thought what it really meant to do was go to 78 and just pump, and obviously we overdid it. And then I think the last video I did was around here. I thought we were going to go all the way to 82 and then just sort of do some back and forth, ultimately break out, and this thing belongs in the 90s, if not hundreds. And then we flushed again. Now, I did say the next level of support is 74. Again, typically, oil does it a lot. It just overdoes the move. In my opinion, 74 really, you're not allowed to go all the way up here from, let's say, 67, rally non-stop perfectly, higher highs, higher lows, little dips, and then just fail and then immediately go past two. I mean, here you've got two support zones. So we failed here, 1, 2, and then go all the way back down to the lows, like mid 60s, because that's really the next level. If we keep going, if we lose, let's say 72 next week, and I don't see why. Yes, maybe demand is going to be less, recession is becoming more obvious. I understand that, but there are some laws, almost unspoken rules, where you've got to go back up, test resistance. You're not allowed to just go down, 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 unless it's some penny stock fraud where news has exposed it. My point is, you can't just go back down, close below 72, and now start going all the way back down to 67. I mean, unless there's peace in the Middle East on a regional scale, I'm going to have to extend. I didn't think I'd be doing this at all, but extend this ascending support zone, because if we do flush 72, I don't see much support until this horizontal 67, which to be honest will probably coincide perfectly with this horizontal, with this ascending. So between 65 and 67, we should have extremely strong support. And there's no way you're flushing that. I don't care what sort of news is going to act as a catalyst, but I'm already surprised and I think it's overdone. But I have to now take into account the lower level, and there's only one. There's this line in the sand here, which led to the catapult all the way up to the 90s. But, you know, look how fast we're giving it all back. So despite me mentioning the 60s, I think we should be holding 74-ish. So yes, we can go back down, but this time I don't think we should be flushing new levels below 72. I think we're going to be holding 74 and then creating a base from which we catapult back up to 82. I really think this is surprised me for sure. But, you know, let's say we retrace, and we might not retrace, you know, from here. We may have already oversold and just come all the way back up to the 80s. But let's say we do go back down, there'll be like a higher low, and then it's, you know, into this area and start testing this sort of 79 zone, and then ultimately just go test here. And this should act as resistance, not just this prior support zone, but the descending. So that's what I think will happen. But, you know, should we just flush lower, this should be extremely strong support zone. Okay, that's oil. I mean, oil and natural gas really surprised me. Uranium did not surprise me. It's just constantly infuriating watching it just go without me. Yes, you know, 28.5 resistance, clearly very obvious. We go back down, we hold. That was whilst the market was dropping. We hold, we outperform whilst the market drops. Then we go back up with the markets. We underperform the markets on the way up, but that makes sense because the market's just absolutely zoomed higher. But now we're starting to catch up, and basically we closed above 28.5 finally, and it was coming, it was obvious. And there it is. It's slow torture for people like me who refuse to chase, and I deserve to be left out of it. But still, it's nice to see for those that are in it. For me, 28.5 closed above. Now we go all the way up to 31.5, maybe 31 first, maybe 30 for some reason acts as resistance. But we are going all the way up here. There'll be some back and forth, a bit like this. You know, it's not all in one straight line. I think it will happen kind of regardless of the markets. Now, the markets will come down. That'll probably, you know, if the markets go down, uranium will just end up being sideways or down 0.5%. You know, it'll be red if the markets are red, but if the markets are red by 2%, uranium will be down by 0.75. It's outperforming when the market's going down, underperforming when the markets are going up, but still up, sideways up, whilst the markets doesn't outperform it. So 28.5, we finally closed above it. Now onto the 30s, 31s, and 31.5s. Well done to the uranium people. Gold and silver. Now, it's been looking good for some time, several trading days, but, you know, this close wasn't the best on a daily candlestick. So we tested the 1995-ish zone, I think it was, and then quite a bit of resistance just before 2000. Now we don't have the best looking candle. We probably have to go a little lower Monday, Tuesday, and then let's see if we can squeeze back up to 2010-ish zone where I see resistance. If I take out the 15 minutes, you can see, you know, up we went, and then we're testing. You could see 2000 coming now, quite a bit of resistance just before, which is why I like to buy things just before they hit my level, or sell them just before I think they're at a level, because, you know, you can always miss it by a few cents. So resistance at 2000, and then bam, we closed at low of day. Not the worst candle when you really zoom in and look at it, but on the daily candle, not the best. So we could just go a little lower, maybe in the 70s before resuming the march up. Let's see. But for me, gold looks really, I mean, remember the dollar, I think, is going to go lower. Yields could also go lower. And who knows, when the market goes down, the gold sometimes like that. So, I mean, there's all the reasons in the world for gold to go up. Fundamentally, technically, we may just have a little sideways day, a little dip before going back up, but we could end up green on the same day on Monday. Just gold looks still very, very strong case for gold, but not the best daily candle close. Silver, on the other hand, well, actually not on the other hand, just very similar. So same sort of candle, you know, actually worse. Close near low of day. way off the highs, just matching gold. I understand, but we're still closing above resistance. So silver's been outperforming gold quite a lot. Had a very nice week there whilst I was on holiday in Milan watching the stocks go up. That was very nice. So can we hold? It'd be really nice. Can we hold above 23.6, 23.5, which has been resistant for some time? Can it now confirm itself as support? And then from there, we start to rise higher. Silver continue to outperform gold. Imagine gold starts to rally, maybe on Tuesday and start to test 2000, cross the 2000 level, go test 2010. Where would silver be if it's still outperforming? Could we be reaching the 25 zone? That'd be so good. I think it's destiny. I think silver will continue to outperform gold as gold really does it. And this time, a lot of people are thinking that this is the one. This is the one where we break out and then we back test, and 2000 acts as support. No longer will it be resistance. This time it's support, and then yeah, the miners will do very well, which is a good segue because I'll now check the miners. Underperforming maybe the metals. Yeah, underperforming silver at least. But it's good because they're really cheap, they're really low, and if it really is the time where 2000 acts as support, silver really starts to outperform and starts to march towards 30. I mean, the amount of money you can make in these miners is just going to be ridiculous. But anyway, not a candle which is as bad as gold or silver's, I would say. It did close kind of near low of day, but not that bad, down 0.3%. That's okay. Given how the close was for the other metals. We just need to close above like 36 GDXJ. For me, it's clear. A close above 36 and then it's game on. But until that day, it's just stuck between this channel here, 36 on the upside, 33-ish on the downside. Yes, we have a gap here, but I mean, if the metals start to have a red day on Monday, Tuesday, we'll probably dip below. But I just feel like the time has come to really outperform for the value investors to just start, placing a serious bid down here. So, but for me, really, it's all about 36 on the GDXJ. Let's just close above that, and maybe it will take gold being above 2000, silver testing that 25 zone. GDX, similar sort of candle, not the best, but it makes sense given what the metals did. GDX, the equivalent is 30. We need to close above 30. On the downside, I see this gap and also price support. It's a bit like GDXJ, Downside, we have this gap and then the price support down here. But momentum's okay. The week wasn't that bad. It was still an up week. So miners and metals are still good. We just need the dollar, and we need to see how a red market day affects the miners, because we've seen markets go up, dollar goes down. That's fine for the miners. Usually they're up for that. But how do they react when the markets are red? And again, I think the dollar will go lower. So be very interesting to see what happens this week. Now I'm going to do the portfolio update, which I think most of you are very interested in. So I hope this video is still useful nonetheless.